Surely you know Mintos, but did you know that you can invest in bonds on Mintos? Well, in this video we are going to explain everything about how to invest in bonds from just 50 euros. So stay until the end because I will also tell you my opinion and whether I am investing or not in Mintos bonds. Before we begin, I would like to invite you to the Telegram community where you can share experiences and opinions with other investors. I would also like to invite you to subscribe to this channel so you don't miss more interesting videos about investments. Now let's go for it. Before getting into Mintos corporate bonds, let's review what bonds are. Bonds are a debt instrument issued directly by the borrower. They are issued by a company or a government. At Mintos, we will only see companies, but we are used to seeing government bonds. They are the most popular for investing in other platforms. Here, what we do, this debt instrument is actually a loan. And we, the investors, will receive the capital we put in when this bond matures, and in return, we will also receive interest. In this sense, it works like a loan. And since we, the investors, are going to receive periodic interest payments that are fixed in advance, it is usually called a fixed income investment. Unlike other brokers where we can invest in bonds too, Mintos offers us investment from just 50 euros. In many cases, investing in bonds requires higher capital. Usually around even 10,000 euros is the minimum you can invest in some of these bonds. Mintos offers us two different ways to invest in bonds. One of them is direct bonds, meaning we will be investing directly in that bond, and the other are securities that have a bond behind them. So here we would not directly own the bond title, but we would own a financial instrument that includes that bond. In either case, when it comes to investing, it won't change much, since we will be able to invest from 50 euros, and what we need to consider are other characteristics of the bond. For example, let's look at this bond here, which is a direct bond. We are going to own this bond. Starting with the characteristics, the first thing we will see is the maturity, which is the term in which the principal will be paid when this bond ends. Next, we will see year to maturity, which means the annual interest we will receive for this bond. And this is the most important thing we are going to have to see, because further below we will be able to see other numbers, other percentages, which also indicate interest, but these can vary. For example, the coupon rate is the coupon this bond pays. However, this can vary, and as you can see here, it varies because the coupon rate that this bond pays, meaning the interest that this bond pays, since in bonds it is usually called a coupon instead of interest, is 9.1%. And here you can also see the frequency at which it will be paid. Here we are going to see that the year to maturity and coupon rate are different. And what is the reason for that difference? And why is it important for us to always consider the year to maturity? Because the coupon rate is the interest that bond pays at the time of issuance. However, when the bonds are sold later than their issue date, there might be an increase or decrease in their price, and that is why the profitability we get when buying the bond can vary. So ultimately, what's most important for us to know about the yield of the bond is to pay attention to the year to maturity, not the coupon rate. It is indeed important to pay attention to the frequency of coupon payments, which is the frequency of interest payments. It is usually quarterly or every 4 months, but in some cases it can vary and it will always be specified here. And it is also important that we see what type of coupon it is. I mean, what type of interest. In this case, it is floating. It is a fixed 6.75% plus a 3-month Euribor. This means that each time we are paid the coupon, they will pay us 6.75%. That is always a fixed amount throughout the entire bond. But they will also pay us an extra based on the Euribor rate, considering the last 3 months. So in this case, the yield of this bond will be variable since part of it depends on the Euribor. Something also very important that we must consider when investing in bonds is the type of bond, and this one is a senior secured bond. This means it is senior debt. The senior debt is the one that in case a debt needs to be claimed, it would be the one paid first. The one who would have priority in claiming a debt if the bond matured and we were not paid. We, the investors, in this bond, because it is a senior bond, would have priority in claiming in this case what they have put up as collateral. And here is a collateral, a backing, a guarantee they have put because it is a secured bond. Another piece of information we have about the bonds is the ISIN, which is the identifier for that debt. We will also learn about the clean price. This is where we will see the price we are paying in percentage terms, and here as you can see it is 100.7%. This means we are paying a little more than the original price of that bond. And here we will be able to learn more additional information about that specific bond. The other bond investment option we have on Mintos is to invest in bond-backed securities. These are, as I was saying, bonds owned by Mintos and we are not the direct holders. In this case, we would see the same information and this bond as it has been issued from the start. Here, we will learn about the coupon rate, which is the interest that will be returned to us. The yield we will obtain as long as we hold the bond until maturity. And this bond, for example, has a fixed amount that will not depend on the Euribor. We will be paid 12%. And this here, as you see, is a secure bond, which means it is not senior. We wouldn't be first in line if we had to claim the debt, but it does have some backing. Right now, of the bonds we have available on Mintos, we have several to invest in. Investing in bonds on Mintos will have to be done manually. There is no auto-invest like there is with loan investment. Here we need to go manually, choose the ones we want, and we will see that we have different options. Some of them are from loan originators that we know from investing in loans on Mintos, but others, which are usually bonds for direct investment, are from different sectors. For example, here we have a company that operates in different sectors, and further below we have another company that is in logistics. All these bonds expire on the maturity date, which as you can see are usually several years, but we can always sell them and also buy them in the secondary market. The bonds that we bought on Mintos, if we want to get rid of them before they mature, we will have to use the Mintos secondary market. We cannot sell them outside of this secondary market even though we are talking about bonds that we own directly. As you can see here in the secondary market, we currently have different opportunities. The secondary market is also an opportunity for us investors to buy and invest in bonds that may be offered at a discount. As you see here, there are some that have a discount. Also, further down, we can see some that have a premium. If we want to sell one of the bonds we have, we could put it here in the secondary market either with a discount or with a premium. If we offer it with a discount, it's easier for it to sell faster. If we offer it with a premium, it might take longer to sell. And here, as I explained before, when buying in the secondary market, we should always consider the year to maturity, which ultimately is what tells us the yield that bond will provide if we hold it until the bond ends. One of the questions many investors ask is what benefit, what advantage does investing in Mintos bonds have when we are, for example, investing in loan originators like Credifiel or EasyDebt, or in some cases loans from Esto or UTE. Other loan originators in which we can invest loans in Mintos. Why would we invest in bonds instead of investing in loans? Well, generally because it gives us a higher return, and while the return from bonds isn't always higher, it does provide a fixed return in the long term. As we know, when we invest in loans, they can currently offer us 10%. A loan originator right now, for example, offers us that return, but after a few months, the return they offer us by investing in loans on Mintos may decrease. However, here if we invest in this EasyDebt bond, we will get a fixed return of 13% until the year 2028. But also, nowadays, Mintos allows us to showcase our portfolio and diversify it with bonds from different companies and different sectors. And this is very interesting so that we do not have all our exposure to loan originators. Regarding the risks of investing in bonds, they are similar to those of a loan. Here, the main risk we would have is default, where the entity we lent money to, in which we invested in that bond, does not return the money we put in or does not pay the interest, does not pay the coupon. For that, we also have different types of bonds with various guarantees. As I was saying, there is the senior secured bond, which would be the safest of all. We have the secured bond where we would not be the priority in claiming that debt, and then we have the unsecured bond, which normally offers us a higher return, but it does not have security, it does not have a backing behind it, so we will have to assess what risk we want to take. But in exchange, as I say, they usually offer us greater profitability. Another risk is that we may have to sell the bond early in the secondary market and do so at a discount, which means we would not be achieving the profitability we initially expected. In short, why invest in bonds on Mintos, or at least why do I invest in bonds on Mintos? Right now I have a small portfolio of bonds in Mintos, but I hope to expand it in the coming months. I hope to expand it because for me it is a diversification for my investment portfolio. And I can also invest diversifying by investing from only 50 euros in each of these bonds. But it also offers me a higher return than loans do, and above all, a higher long-term return. And there is something we must keep in mind, and that is, if the interest rates drop, the issuance of bonds with a high coupon rate will also decrease. So the offers we will see soon are likely to have lower returns than what we might be seeing now. Therefore, it's an opportunity to secure high long-term profitability. My portfolio in bonds is small for now, but I hope to expand it in the coming weeks. And if you also want to start investing in Mintos, bonds, or any of the other investment opportunities they offer us, like loans or ETFs or real estate investments, if you sign up at the link I leave below in the description, you will get 25 euros if you invest at least 1,500 euros during the first 30 days. Now tell me, what is your opinion about Mintos bonds? If you are already investing in them or if you are going to invest. And if you have any questions, also leave them in the comments because you know that I answer all your questions. Before you go, I'd like you to give this video a thumbs up, a like, and subscribe to the channel so you don't miss more interesting videos about investments. Before you leave, I invite you to join the Telegram community where you can share experiences and opinions with other investors. See you very soon.